What's up, traders? Matt from the Trade Brigade here doing a technical analysis on ticker symbol TWLO for Twilio Inc. On the left-hand side, we have the daily time frame, and on the right-hand side, the 30-minute intraday time frame. First things first, I need to let you know they gave us an earnings announcement after the bell today, so let's flip on the extended hour session here and see what's going on with the number. Would you look at that? A nice move to the upside here. Very likely that will open on some sort of gap up, some price acceptance higher. Please keep in mind, a lot can happen between now and 9:30, so adjust accordingly, but we want to know where the overnight high is. We want to know where the forecasted opening print is, and we also want to know where today's high of day was. With all of that being said, let's turn this off and talk about scenarios over on the daily time frame chart. First things first, from the daily before we even got into the earnings gap up, notice that we did have a higher low double bottom, and we were getting into that neckline on today's session. It didn't quite break. As a matter of fact, we had a red bar, and that's going to lead me to the next point here is gapping over a red bar. Anyone who was building a short position on today's session, they're going to wake up feeling some pain if they haven't already closed out. I would imagine that leads to some buying pressure. Doesn't really change our scenarios, just something to be thinking about on the direct open. But for gap scenarios, right? Scenario number one is always the gap and trap. And what that looks like is opening here. Sure, we could get an opening buy up higher, but if we fail to take out the overnight high and trade lower through the opening print, we're looking for a short to close the gap to today's highs around 205.41. Notice that if we come on over to the trade tab, this stock is easy to borrow, so you can short the shares, and the volume on the put side of things is absolutely horrendous. I would stay far away from the puts inside of Twilio. Let's go back on over to the chart. Again, we can short it via shares, and that's how the downside would pan out. It would probably be more attractive if we did something like this, never made it anywhere close to that overnight high, reversed immediately, crossed through the open. Again, that's going to make your trade more attractive. Your stop loss goes over the high of day. Fantastic. The flip side of this coin is, of course, the gap and go. And again, with this red bar, green gapping over red, maybe there's a chance that there's some sort of run. Ideally, if we open here, you've got to wait for some sort of bull flag pattern to be put in unless you're quick draw McGee off the open here and can scale into that with confidence. Again, probably not something that's for everyone. But if we can put in a bull flag off the open or even some sort of ascending triangle, something that essentially sets up a breakout up and over the overnight high, the target will become the next daily area of resistance. And what do we have? Well, if I do something like this, so what I'm looking at here is this support. Then if we drag it across, turning into resistance here, that's kind of like right where we're going to be having that overnight high. So I wouldn't really look too much at that. These highs are quite, nicely incrementally lower, right? So if I do something like this, notice how all of these are like perfect lower highs, and there's just a lot of resistance points overhead, right? So to me, that's a little bit concerning. The other thing I would point out that's going to be a player is this, right? So do we open above or below that resistance trend line? If we open above, consider it broken, and maybe we get the run and there's a little bit more of a bullish slant. If we open below and it was just a bit of a fake out in the after hours, I would definitely be looking for a return to fill the gap. So that's one more added piece of complexity. If we get the gap and go, these highs are incrementally going to be your targets. 280 up to roughly, let's just call it 295. Anywhere in there is going to probably prove to be a little bit resistant. That's kind of all I've got for you based on all of this chop that we saw in the past here. Of course, it was at the time a symmetrical triangle, no more obviously, but those levels are still important. So that's all I've got for you inside of Twilio. If you enjoyed the video or learned anything new today, let me know in the comment section or by giving the video a thumbs up. Don't forget our main channel is linked in the description, and all of that being said, I wish you a green trading week.